Good evening, everybody. We're going to first look at. No, Jay, I was just telling Jim that when I got there today, there wasn't a single person in the waiting room, so I figured they'd heard me complaining so much last time they didn't want to have anything in the way. So I was in and out in 15 minutes, which was more, not even 15 minutes, 10 minutes. So, yeah, I was just telling Jim that it doesn't bother me, but she's unfamiliar with the surface of my left eye, which probably has scar tissue all over the cornea. So I'm going to just keep my lenses out for a day or two more. That way I'll be safe. All right, we're going to go through real quick on how to identify breakouts and what to do with them. We did a Saturday session a while back on breakouts, and it seemed to be what everybody would like to go through. The benefit we have with candlestick signals or candlestick chart graphics is that we have a good idea what to do with, Raymond and I will get to that when we go to the live charts, what to do with a trade based upon how it opens out the next day or through 2 or 3. So how do we find the power signals and patterns? Well, my definition of a power signal or pattern is something that not only tells you it's going to move in the right direction, but in a real powerful move in the right direction. And that is usually instigated by a breakout type situation. As we saw, when was it? Last September or so, when we started buying OCGN, was because it broke out, it popped again, and then did kind of a fry pan bottom, and then just took off. Where was the time to get out? When you have big moves like this and they open down here, that tells you that's where the profit taking is coming in. But in the meantime, we bought it at 73 cents and we closed out in the $17 area. So anytime we see this breakout, usually it's because of a pattern. Now we have methods to start going after it and when to start taking profits. Again, that's a simple process of going to our 10-minute chart. So this is why I always advocate use the fry pan bottom as one of your major trading patterns, because not only does it allow you to see when it's working, it's usually a breakout to the upside, which again has 3 strong benefits to it. 1, have a high probability you're moving in the right direction. 2, Stephen, email Abraham at candlestickforum.com. He'll get you the links. Let's see, what was I saying? Oh, 1, it's moving in the right direction. 2, the expectation coming out of a fry pan bottom is a strong price move. And 3, if you're in a pattern breakout, usually the strength of that move will continue in spite of what the overall market what the overall market direction is. Courtney, if you're a member and not getting the morning and afternoon comments, email Abraham. Becky, can you put in Abe's email address? Just email him, say I'm not getting the proper emails. All right, so how do we identify the strong price moves or the strong signals? Jay Clark, yes, there is a slide up. Go up to the top of your page and make sure you're clicked on stock or screen sharing and not slides. Then if that doesn't work, hit the red X up in the top right corner, log off, and log right back on. All right, and then we can analyze what is going on. First of all, our first analysis every single day is what do we think the market direction is going to be. And that's easy to identify when we see buy signals, especially at support levels in the oversold area. Anticipate up, anticipate down, anticipate up maybe, anticipate down. So you can get a good general feel for the direction of the market. But even with markets trading off or getting toppy, there is always price movements out there that we can identify. And the reason we can identify them is the graphics tell us there is a drastic change of investor sentiment. Now, the first thing that we do, or I do anyways, or everybody should do, is if there's a gap up or a breakout, go to your news and see if there's any news that warranted that price move. And as we go through this, I'll show you the ones that warrant the price move and ones that don't warrant the price move. All right, so this is the type of chart we're looking for. Now, everybody always asks, well, do you use the Greeks? Do you look at your delta? Do you look at your gamma? And the answer is no, because the delta, gamma, beta, whatever, has nothing to do with this move because it was based upon this price trading. We're interested in this, and that's where a fry pan bottom or any pattern breakout is going to illustrate a major change of investor sentiment having nothing to do with any of the Greeks in the past. This also keeps us from having that hesitancy where you say, oh man, I don't want to be buying something that's already up 3, 5, 10, 15, 20, 30, 40, 50%. You do if it's a pattern that you can recognize. Greeks are only good for COVID variants. So anytime we can see a pattern, here's a fry pan bottom with an extensive series of dojis, and then bam, there's the breakout. This is the expectation of a fry pan bottom breakout. And once that breakout occurs, we don't have to be caught by our own emotions of saying, oh man, I'm going to take profits because I've got a profit. We can see what the indicators are telling us we should be doing. So even today, when the market was off 500 points, this one was still up huge. So that was why we recommended this one, ISPO, this morning. Because look at your fry pan bottom setting up with a series of dojis. Now remember, identifying this is telling you the probabilities are pretty strong you're going to be moving in this direction, a positive direction. Again, just the fact that you have a series of dojis. Remember our doji rules. If one doji means indecision, a series of dojis is greater indecision. I could use a profit when I trade. Ed, you have it. It's already built in. The charts that we look at, the signals and patterns we look at, aren't just arbitrary guesswork. They're the statistical result of what the Japanese race traders have identified for us over the last 400 years, that human nature works the same way time after time. So what this essentially does is, anytime you're investing in something that's being created by investor sentiment, we know the expected probabilities of, one, the direction, and two, the magnitude. Now, the reason I like this one is because it's trading down here at 10. This level just up above here was 50. And then a month or so ago, it traded as high as 100. Now, does that mean it's going to go to 50 or 100 again? Who knows? But if it does start heading up, what's most people's fear factor? Oh man, it's at an all-time high or a new high, I don't want to be in it. Well, that's all alleviated by the fact that it's already been up here. But if it trades up here, people aren't going to say, oh man, this is way too high. It's still got a lot of running room. So this one I would be buying on positive trading again tomorrow. Everything's setting up. Fry pan bottom with a big series of dojis up through the T-line. Stochastics coming up. What's the worst case scenario? It's heading for the first target up here at the moving, or at the 200, which would give you about a 35% upside potential. So anytime we can use the information built into candlestick analysis, when they break something out, that becomes our alert. Darren, no. That's why I've often said that you could take everything off this chart and trade successfully just on the candlestick signals. The T-line was something that one of my first private training students, Rick Sadler, pointed out after he came down to Houston for a 3-day session on candlesticks. And about 6 weeks later, he called me and said, take a look at the 8 exponential moving average. It works extremely well as a support and resistance level. So we have the benefit of computer-generated information that the Japanese race traders obviously didn't have. Now, I'm sure they must have had things like the moving averages, but they would have to have calculated all by hand. But the Japanese race traders did not become wealthy using candlestick analysis. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries because they were using one basic indicator, human nature. Would Bollinger Band Squeeze help identify? Robert, you can put whatever you want to on your chart. Because if you come back to the main criteria of what works on a candlestick chart, it's your candlestick signals. Then anything else that you might want to add, you can put on your chart if it enhances the probabilities of being in a correct trade. So once you see something like this, after a big, long downtrend, what's it telling you? There's been a change of investor sentiment, or there's something that changed that. So you go in what we call the RARE process, research analysis, reverse engineering. We see there's a breakout. Now we go find out why that breakout occurred. And if it's a relevant factor, meaning something that's going to improve the future of that company, you can get ready to start using it. Now, the next day, this one didn't confirm, but it gave us an alert. Then there was a buy signal, and a buy signal, and the illustration of fry pan bottom in progress. So even though the signal might not be an immediate breakout, it's telling you there's been a change. Keep an eye on it. And it doesn't necessarily mean all your signals or patterns are going to be bullish. If we know the bearish best friend is a strong sell signal, and we can see you're in a downtrend, and the fact that it did it right off the 50 down through the T-line, that's just greatly improving the probabilities that we're heading lower. IMTE was halted today for communication news in the sector. Okay. So this is why we go through step by step of wanting to know what the signals are, what the patterns are, what the top rank signals and patterns, which is a combination of those. This information, once you have it in your head, now becomes your main analytical factor versus fundamentals like earnings per share or anything else that you can think of that people use to make their decisions. Essentially what the candlestick charts show you is what everybody's decisions are based upon the information they're analyzing. Courtney, you can use whatever example. What I was reading Bill's example. Whatever you're trading. I trade, when I'm trading my stock positions, they're swing trades. So I'm using my daily charts as my criteria. If I'm intraday trading like my commodities, soybeans, cattle, the dollar, I'm using my 10-minute chart as my bellwether. So it all depends on how active you're trading. I used to trade the E-minis off the 1-minute, 3-minute, 10-minute chart combination. But now I don't have the time to be trading that active. So if I'm trading the E-minis, maybe now I'm trading off the 10-minute with a combination of the 5-minute and the 15-minute. You can set up whatever time frame works for the style of trading that you want to be doing. Remember, the definition of a candlestick signal is the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether that time frame is 1 minute or 1 month. Yeah, all the charts we're going to be looking at tonight are daily. Now, yeah, so because most people are trading daily positions. If you're an intraday trader, if I saw this gapping down, maybe I'd be trading off my 10-minute chart. Mr. D, we will do live charts when I get done with this, with the PowerPoints. Example of rare. Rare just means if you see a big breakout or a big breakdown, go see what the news was. That's all that means. So if we know what happens after specific candlestick signals, like the bearish double doji, notice what your trend was doing in a downtrend. Notice where your sell signal was, right at the 50. Notice what the double doji did. It came up and couldn't get up through the 50. And then yesterday, it gapped down and opened at the previous day's open and then started trading lower. When they're gapping down below the previous day's open, that's a good sign that the bears are in control. So we got a sell signal, we got stochastics rolling over, we're in a downtrend, it fails right at the 50. Where do you think the next target is? Probably the bottom of the trend channel. So this is what you want to kind of start learning. There's our best friend gap up, breakout. Is it going higher? Well, that's where you go analyze to see what the news was. I think the news on this one, was this the one that had the Alzheimer phase 1 test working pretty good? Well, that probably means that's going to be some good future news. So if this opens tomorrow down here, you wouldn't touch it until it came back up through this level. If it opens positive, consider it looking like it's going into a 45 degree. So we can identify something big happening and then be ready for what happens the next day. CPSH, your slow curve breakout, opens positive. Now, if you're leery about going after something after it's moved pretty big, very simple process. Flip to your 10-minute chart. If it looks like this one's still trading positive, go to the 10-minute chart and see what that 10-minute chart looks like. If it continues to trade up above the T-line, that means they're still buying after the initial breakout. So a lot of this is just common sense built into candlestick analysis charts. If I see a best friend breakout in an uptrend, that tells me there's probably a lot more life in that price move. If I see a breakout and I find out that the only reason this was up strong was because it was an upgrade, now you have to consider, is an upgrade telling you there's a major change of investor sentiment, or is that just one analyst or one brokerage firm saying they're upgrading the stock? Is that a change of investor sentiment? Not really. That's more apt to be just a change of supply and demand on a short-term basis. The supply or the demand coming from everybody that follows that brokerage firm or that analyst. So you have to be a little bit more diligent as far as whether that's going to continue its uptrend. And if you see a breakout, something good happening, where is the last place it should be trading? Back down through the open. Because if you just analyze, if they open this positive and trade positive, who's in control since the open? Obviously the bulls. Yes, it also pertains to downgrades. Now, probably not yet. Now, if I had been long and it was up here, there's two things that you should be analyzing on a big breakout move. Is that breakout going to sustain? First of all, I'd watch to see if that happens. Secondly, if I was long, it shouldn't come back down through the open. If I was buying right here and it came back down through where I bought it and then back down through the open, I'm closing it out immediately, because obviously which way is it moving at that time? It's moving in the wrong direction. So not only can we analyze the different elements to a breakout that would create what we would consider a 45 degree, I've got it on here someplace. We can also analyze the fact that when we get too far away from the T-line, you flip to your 10-minute chart and get ready to take profits. Now here's just something based upon 40-some-odd years of experience in trading. If you've got a big, huge price move, you close it out or take profits on the first signs of selling. In this case, look at your bearish engulfing signal. You close it out. Because what does this usually tell you? You've finally reached a level where the bulls and the bears come into equilibrium, and then it usually doesn't do anything from there. So my rule of thumb is, if I take profits right here, I don't pay attention to this trade until it comes back up through this level, telling you that profit taking's over. So anyways, that's identifying the breakouts. So let's go to live charts. See if I've done this with any elegance. All right, so, this was VGR. So this one was on an upgrade, a little bit more suspicion as far as follow through. Yes, SISP broke out today after that big breakout signal yesterday, a left-right combo up through the T-line, up through the 50. And IPSO getting ready to buy this one again on positive trading because it's got a lot of running room to the upside. So which one looks better and why? Oh boy. I guess, Bob, my answer would be which one opens better tomorrow. Wouldn't want to see this one open down here. Let me make this big enough where we can see it. I wouldn't want to see this one open down here. I wouldn't pay attention to it until it came back up through this level. Whereas on ISPC, I wouldn't want to see this one open down here. I want to see it open positive, telling you the bulls are still in control. Okay, so let's go back to the markets. This is why we always want to use the kind of the observations that the Japanese rice traders have produced for us based upon human nature. Where do most people buy? They buy exuberantly at the top. So anytime you're in the overbought area and you see a gap up, there was one of two things that this chart was going to tell us. One, positive trading today would have told us we got a wave 1, wave 2, wave 3 that broke out through the 200. Or two, when it did a bearish Harami doji yesterday, after gapping up, stochastics in the overbought area, now our analysis becomes even more simple. The doji rule, the price is usually going to move in the direction of how they open after a doji. And if they opened lower, what was our first assessment or our first anticipation? They were probably coming back down to test the 200. But it told us they were probably selling things off. What's stochastics? This is their 1233 slow stochastics. Yeah, we use them on all charts. And that doesn't change from chart to chart. Oh, I forgot that if you have been watching what our kind of our analysis is from Candlesticks, and you haven't tried the membership, use this. Try our 2-week free trial. We've got the chat room open all day long. I'll come in usually around noontime when everything settles down. I put out 2 or 3 stock picks every night. If we think the market's going up, you're probably seeing 3 longs. If the market's going down, you might see 3 shorts. If the market's moving sideways, you might see 2 longs and 2 shorts. But they're not so that you have stock picks. I do it in a video format so you can understand the rationale of why those charts are good bullish or bearish charts. Chad, send it to him again. You'll get to it. Sorry to see you go. All right, so the fact that we had a bearish Harami and it opened lower today told us they were probably selling off. And here's a very simple rule to use. Look at how the NASDAQ gapped up. Oh, here. Abe or Jim, can you post Abraham's email? I can do it here real quick. There it is. Abraham at candlestickforum.com. So here's a very easy rule to remember. if you've gapped up in the overbought area, it shouldn't be closing back below the previous day's open. That's a strong sell signal. So when the NASDAQ did that the other day, that gave us a good impression that they were going to come back and test the T-line on the Dow, the NASDAQ, and same scenario here on the S&P 500. The gap up hanging man. Remember, the gap up was your alert. The lower trading was telling us they were starting to take profits. And then when they opened it lower today and started trading lower, where would you think the first expected target was here at the T-line? If they open it lower tomorrow, where do you think the next expected target's going to be? Down to the 200. Okay, so if we always have the ability to see what the strongest signals and patterns are, I'm going to start off with the bullish ones. Look at our bobble breakout right here. Now, even though you're in the overbought area, anytime you see a bobble breakout, we can see it as a J-hook pattern, but with more relevancy because everybody else is watching to see what it's doing at the 200. So we can be buying right in here when everybody is waiting to see if it's going to confirm to stay above the 200. We know the probabilities of that happening is extremely strong, and that's what causes your next strong wave 3. Same scenario here on Flex today. So this is where you have 2 plus 2 analysis. First of all, you've got a bobble breakout. Notice how they came up and failed right at the 200, pulled back. Notice where they pulled back to. Right smack dab to the T-line. That is a very strong indication they're not selling it off. And then look what they did coming up through the resistance level. A trend kicker signal. What's that tell you? There's going to be a lot more upside. You'll probably see that on the recommendation list tomorrow. Now remember, going long or short is still a process of seeing what the overall market trend is doing. So here's another bobble breakout on VTYX. Look at your double doji. Look at your breakout through the 50. And the market was off 500 points today. The NASDAQ was off a bunch. But look what this one did after the bobble breakout. Still trading higher. This is why I always advocate using the patterns, because they're going to have a lot more consistency in what the pattern is telling you, and less reaction to what the overall market trend is doing. So there's your J-hook patterns. There's your J-hook patterns. That's on tell. Now some of these may have sold off by the end of the day. Hey, buddy, what is that? There's your J-hook pattern setting up. Now, if we can recognize this as a classic pattern, and a classic pattern is a fry pan bottom followed by a J-hook, if you're getting ready to buy this, you make it very simple. If it comes back up through there, it's telling you wave 3 is in progress. Oops, so there's a failed J-hook pattern. If that had started going in this direction, there was your J-hook pattern. But the fact that they closed back below the T-line, what did that tell you about your J-hook pattern trajectory? If you'd been long on this and waiting to see if it was going to hold up above the T-line, when it closed here, it told you get out. looking for a pattern over, it doesn't matter, Shirley, how long you're looking at it. I use this, I mean, you can make your chart as big or as small as you want. I want to see what's happening right in here, especially right in here. Then see if there's anything that's telling you there's a pattern set up. The T-line is the 8 exponential moving average, yes. Very simple rule. You can stay short until you see a candlestick buy signal and a close above the T-line. You can go long when you see a candlestick buy signal and a close above the T-line. And you can stay long with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So the strongest statement on a candlestick chart is that if the candlestick signals are the graphic depiction of everybody buying and selling, basically investor sentiment, and the T-line acts like a natural support and resistance level of human nature, and you'll see that play out many times over. You'll see prices move right to the T-line and move the other, or bounce up off of it, or resist at it. It acts like a natural support and resistance of human nature. When you combine those two elements, you've got an extremely high probability trading platform. Bingo was trying to do a little J-hook pattern. A lot of these may have diminished while I was at the eye doctor's today. Whoops. So here's a little J-hook pattern setting up. Wave 1, wave 2. What was the confirming indicators on wave 2? Couldn't close below the T-line, came back up above the 50. This is a strong implication that wave 1 and wave 3, bringing you up in this range, is a high probability trade setup. So there's GameStop. If you were trading GameStop, you'd be waiting to see whether they're going to start back up doing a J-hook pattern. Oh, and that was the couple standing in front of a mirror. And GameStop's now up to 195. All right. Reported stock. Okay. So that's now indicating a J-hook pattern. So she was standing in front of a mirror and she said, "Look at me. My face is wrinkly. My arms are thin. My breasts are sagging. My legs are spindly." And when she turned around to her husband and said, "Can you say anything nice about my body?" He goes, "Well, your eyesight's still pretty good." Or then there was my buddy who got a venereal disease in his eye, but that's because he was looking for love in all the wrong places. All right, so there's your J-hook fry pan bottom type pattern. Notice what this one did today when the markets were selling off heavily. That's why a pattern is much more worthwhile than just an uptrending stock. There's your bearish J-hook pattern on DWAC. So this is why the combination of the T-line and your signals and your stochastics there you go, Andrew. Notice your shooting stars right here at the T-line, stochastics rolling over. So what can we anticipate? One, probably coming back down to test this level. If this level doesn't support, what's the anticipation? Wave 1, wave 2, wave 3 being the same magnitude as wave 1. let's see now. Down to your fry pan bottom. Now, the reason I put this one up was, look where your fry pan bottom based, right on the 50-day moving average. Why is that relevant? Because everybody and their brother is watching to see what it's going to do at the support level. We can see it's a nice fry pan bottom. This one you could be buying if it comes up through this level. That's Zeta. The mining stocks are coming up. That's MNRL. Well. TMC is not working off of here. Newmont Mining. Look at your belt hold, confirming your J-hook pattern move. You just stay long on this one. This one had something. Now I can't find out what it was. Maybe I typed it wrong. Maybe I did. Is it CMAD? Nope. Something's wrong there. Okay, and there's another good chart. So, Marshall, are you in here tonight? Here's the one thing I tell people about a chat room. I've got some people that help me keep an eye on what's being discussed in the chat room. We don't allow politics because politics has never made anybody 1 cent expressing their opinions. But I also tell people that 90% of what is spewed in a chat room is probably not going to be worthwhile for your trading. But it's the 10% that you want to keep an eye out for. So I know the people right now that put out good ideas. Marshall is one of them. There's 3 or 4 other people that have good trade identification. What is the Nexi pattern? It's a J-hook pattern, and look at the signal. Look at your bullish flutter kicker signal. Opens here, closes here. They gap up and do a doji above the previous day's open. Then today they opened up positive and traded positive. So that's called your bullish flutter kicker signal, because if you took out this little flutter, you'd have a kicker signal. It's very relevant for easy day trading setups because the doji rule. If we know they gapped it up and then they open up positive, it's going to trade positive, giving you a bullish flutter kicker. The probabilities are extremely strong. It's going to be trading in the correct direction. So this is what we want to look for after a gap up. Notice they gapped this up, and it was very indecisive. What was this going on after this downtrend? Probably some profit taking right out of the chute. So then if they open it positive and start trading positive, it pretty much tells you the profit taking's over, they're still heading up. Yes, kind of a scoop type pattern. All right, whose handwriting is this? This one was starting out nicely, except today it did kind of a bearish harami, so now you have to watch it. Let me see. We did tell. Oh, that one's not coming up. I don't know why some come up on Now there's your J-hook pattern. So this is how I learned candlestick analysis when nobody else was around doing candlesticks. Where did this uptrend start? Well, there's my big bullish engulfing signal. What's this next trend starting with? There's your doji sandwich. And then they kind of broke out through this level today. That tells me that this one's a high probability trade setup if they open this one positive tomorrow. So even with the market trading down, this one was still trading positive after that doji sandwich. On AMBC, it did not open up, and then it started to trade down. Why wouldn't you have sold it then, provided that the down move was only the first 5 minutes of trading? If I had owned it, if I was buying it today, bah humbug. It did not open. So I wouldn't have bought it right out of the chute. But then when it started trading positive, as soon as it started trading positive, how would I know they were buying? Because the candle was turning green again. And what did I want to see after this level or this trade? I wanted to see bullish trading confirming that the profit taking was over. So just because it didn't open correctly didn't mean that this wasn't a nice breakout with expectation of more buying coming in. If you got a gap up after a doji and trades back down through the open, do you get out immediately at that point? I get ready to pull the trigger, yes. So my ultimate spot would be, which one were we looking at? Now I forget, was it? Yeah, so if this opened positive and started trading positive, if it came back down through the open, I would get ready to close it out. And if it came back down through the doji, what did that tell me? That this was not a bullish trade, close it out. Does doji include another indecisive? Does doji include another indecisive signals? Yes. Yeah, you can, anything that shows indecisiveness. Now, a spinning top is basically a doji, but just with a little bit bigger body, but it still illustrates the same thing, indecisiveness. So here would have been one, but if I had been buying on that day, I would have closed it right back out with it closing back below the T-line, because of the T-line factor. What if you owned it and would have sold it when it dipped under the T-line? Which one, Bob? AMBC? Ah, humbug. Why am I doing this? No, I wouldn't have today unless it headed down and it appeared like it was staying down. Then I may have closed it out. But then if it turned around and came back up through this level, doing what we suspected the signal to do in the first place, I would have bought it back. What percent of gap ups fill back in negative? Bob couldn't put a exact percentage on it because it's still a function of what is the overall market doing. So let's put it this way. If I see the market is trading higher in an uptrend like we expect it, and it opens positive or gaps up, it may not fill that gap for 2 months, 2 years. But if it opens up positive, gaps up, and starts trading up, and then all of a sudden the market starts selling off and it starts backing off, yeah, as soon as it comes back down through the open, I'm likely to close out that position because now it's not a gap up anymore. Oh, boy. Am I looking at the right one? Tom? No, that's not a spinning top. Meaning today, a spinning top looks more like this with a small body, or a spinning top. That's a bearish engulfing signal after a bearish kicker signal. Okay. All right. It looks like the lithium stocks have been acting well. SLI, lithium still in an uptrend, LAC still in an uptrend, and PP or PLL, that's not a good one. Dalton, hold on to your individual ones until I tell Jim to do the double line. Then you can put your requests in. So we did all the breakouts. Now this is one that you keep an eye on. Look at your morning star signal. Not at the bottom of a trend, but it's at the flat or the end of a flat trading. So that's kind of your mini scoop pattern. This one you can definitely be buying on positive trading, confirming the morning star signal scoop, especially if it breaks out through this handle. That tells me wave 1, wave 2, now they're starting wave 3. ISIG. Now the gap up, it was trading better earlier. If I was long on this one because of the gap up and staying above the 50, I would definitely need to see it open positive and trade, well, it did trade positive. I wouldn't want to see it trade back below this level. If it did, that told me they were selling it off, and then still selling it off. You want to see this open positive. Now, the reason this one looks good is because you got kind of a mini scoop pattern on this one. Well, for crying out loud. Why aren't these working here? Well, RDW is working well. So this is when you see kind of a breakout move, big move, then you look for that 45 degree. The 34, so here's the concept or the rationale of what you put on your chart. You put on anything that improves the probabilities of being in the right direction at the right time or a support level. So obviously the 50 and the 200 are what everybody has on their chart. So we want to see what they are doing or what people's decisions are at those levels. The T-line is probably your most relevant functional support and resistance level of human nature. Then we've got the little 3T line, works in conjunction with the T-line. Now I put the 34 on here because it works reasonably well. So the whole idea of what you put on your chart is based on how well does it work to improve your probabilities of identifying where support and resistance levels are. If you like Bollinger Bands, if you put it on and it helps your ability to see what's happening based upon the candlestick signals, put it on there. If somebody says, put the XYZ indicator on, if you put it on and after a few weeks you see, well, it's not really helping me, take it back off. The most important criteria for analyzing a candlestick chart is the candlestick signals. anything else you put on the chart should be improving the probabilities or helping you analyze. If you want to put the 20 moving average on there, do it. I used to have the 20, and I could put the 20 on there. It wouldn't clutter up the chart, but it doesn't work as well for me as the 34 EMA. On the short side, whatever improves the probabilities, lots of indecision right here at the 50, and then they gap it down through the T-line. Where would you think your first target's going to be? Probably back down in this area. Then possibly even further on down. Darn. I scribble. Yeesh. Lots of indecision. Remember, the dojis tell you indecision, and if you see that indecision in the overbought condition at a level everybody else is watching, this also becomes a high probability place to be shorting. That was exactly why we recommended shorting Restoration House or Hardware. It's because they did a doji gap down in this downtrend right off the 50 down through the T-line. If they don't hold this level, they're probably heading down to this level. Okay, let's see, where are we now? Pod, same scenario. Where did your shooting star signal occur? Failure at the 50. Now you're below the T-line. Baba, doji gap down. Anytime you see a gap down after a signal, that tells you not only was there a change of investor sentiment, but now that change is being showing a lot of force in that direction. Advanced auto, hanging man, bearish confirmation, failure at the 50, heading lower. This is another strong signal. If they're trading up, look at all our indecision. They're trading up, negated those. Then all of a sudden they turn around and slam it down. That's kind of like a booster move, telling you there's a lot of force to the downside. No, Ed, this chart right here could be a 1 minute, 5 minute, 10 minute, 30 minute. It looks exactly the same as the daily. All the indicators on this chart are what you call fractal, meaning they work on any time frame. LWLG, observe the obvious. An evening star signal right smack dab at the 200, a close below the T-line. Where do you think your next likely target's going to be? Back to the 50. Evening star, left-right combo, failure right at the 50. And which direction is this trend? It's already in a downtrend, and every time they come up and hit a resistance level, they're selling it off. Where do you think the next likely target on this one would be? Coming back down into the trend. And a couple more. Oh. Advanced micro. Which direction is this going? It's been in a downtrend. So the number one quick observation is, yeah, you see it's in a downtrend, so what should it be doing if it's going to be in an uptrend? It better have strong implication that this downtrend is over. Now you've had a hanging man signal followed by bearish confirmation and a gap down through the T line through the 50. There's your first target down here. Okay, so we recommended going short on Carvana because of the bearish engulfing, the resistance level, the double doji failure at the 50 back down through the T line, first target right here. Same thing with purple. Bearish Harami failure right at the 50 through the T line, a double doji opening lower. Where's your next target? At least down here. So using the just one quick glance on most charts will give you a good indication of what's happening to the trend and where the trend might be supporting or resisting. So real failed here at the 50. Where's your next target? First target, second target. So the fact that they gapped these markets up and then did potential sell signals, that becomes your alert. That's just kind of now observing what's happening in human nature, which is what the Japanese rice traders have produced for us, giving us the graphics of what's going on and where the likely reversals are going to be. So that's about all I got for tonight. Are there any general questions on candlesticks? You can see U.S. Steel ever since the bullish engulfing right off the 50. How long do you stay long on something like this? As long as it doesn't close below the T line. All right, any general questions? If not, Jim, go ahead and do the double line. And then 3.6 seconds, do the next double line. April 1st. Oh, is tomorrow April 1st? First seasonality is a strong up day. You have to, yeah. Stephen, the benefit we have with candlestick analysis is no matter what the general rules of thumb are, buy in May or sell in May, go away, Santa Claus rally, whatever the general rule is, you see what the charts are actually telling you. Remember, the charts don't lie. They are the accumulative buying and selling decisions, not projection, not prognoses. They are the actual decisions of what everybody is doing. The VIX, kind of dreary, not really going anywhere. Oh, I didn't do the biggies tonight. Apple, look at your gap up, bearish Harami. First target is the T-line. NVIDIA, evening star signal, came right back down to the T-line. Now you have to watch to see where it trades tomorrow. If it trades lower, they're going down further. You can see the failure of Netflix right at the 50. Amazon kind of an evening star signal failure. This is where you put your Fibonacci retracement on. It could come back here, could come back here, or if you put your, oh, I can do that over here. You put your Fibonacci retracement numbers on. There's your 38% retracement. There's your 50%. There's your 62. It's not that they're going to go back there. It's just that if you see a buy signal at one of these levels, that's a pretty good indication that's where whoever is following whatever technical trading, that's where they're starting to buy. Atom, another one you can go short because of the failure at the 50. TMC, for some reason, doesn't come up over here. Let me see if I can do this real quick. TMC was acting strong today. Yeah, I had that on my list as one of the mining stocks that was acting well. Oxy just went flat. Would not be long or short an Occidental. Somebody else wanted Apache, another one that if you're long and this opens lower, you close it out. No direction. UVXY. If you were short, you would have covered the short. Wouldn't be going long until it gets up through the T line. Nike, you can go short on this one if it opens lower tomorrow. Again, a failure right here at this resistance level, which coincided with the 50-day moving average. We'd put a buy recommendation on Square. Was it today? No, it was yesterday, but it didn't. You're long. Yep, I would have closed it out today. A bearish engulfing signal, overbought, closes below the T-line. I'd be out of this one. A bearish J-hook. No, just bearish. ARRY, stay short. Mullen tried to bounce back up today. I would stay long on this because you've got the classic pattern, your fry pan bottom, trying to follow the J-hook. If this came back up through today's open, you could still be buying this one aggressively. Bed Bath & Beyond, that one, here's a perfect example. If you had been long, your safety stop would have been right there. Right now, you could possibly go short on a bearish doji sandwich on a lower open tomorrow. We did in a video, go short on this one on lower trading tomorrow. GLNG, stay long, but you have a shooting star type signal. If you're long, put your safety stop at today's open. It shouldn't come back through that level. Alcoa, that's kind of turning into a nothing chart. Your dark cloud, it needed to stay up above the T-line. I probably would have closed this one out and wouldn't be long or short because of the condition of the market in general. You could be shorting this one. Apple, we did. Look for it to at least come back and test the T-line. Etsy, what was that? Etsy, you can go short on this one. Anytime you see them opening and trading back below the previous day's low, that's a strong sell indication. And when they did it right here at the 50, that told you they weren't going up through that level. So you could be shorting this one. Pfizer, another one. There's another dark cloud. I would suspect at least coming back to test the 50. CRTX, oops, there it is. If this opens lower and trades lower tomorrow, close it out. Then you don't pay attention until it comes back up through this level. Winnebago, whoops, started back down again. I covered it when it came up through this level. Now you could get ready to go short because of that kicker signal. Now an evening star signal failure at the T line. The Qs, look for it to test the T line. Right now the YMs are showing the market up 98 on the Dow. NIO, another failure at the 50. If I was long after that shooting star, it had to open positive and trade positive. I would have closed this one out today. You've got a shooting star followed by a bearish engulfing right at the 50. STRC, you can stay long on this one. You got a morning star signal, stay long. I would use the T line as your stop. Morning star, J-hook type pattern, you could buy this one on positive trading. That's a good chart. Pen, I wouldn't be long or short this one. That's in a sideways mode. The YM, yeah, that's right now showing aftermarket. The Dow would be up 100. That's another sideways wedge formation. Wouldn't be long or short this one. No direction. DRQ, you can stay long on this one. You're bullish engulfing, bullish confirmation, J-hook type pattern. That's a good looking chart. BLBX, that one's not coming up. Probably wouldn't be long or short in this one, JB. Mullen, I would stay long. You want to make sure it stays above the T line. You've got the classic pattern setting up. ET, you could go short on a lower open. Your bearish Harami up here in the overbought area with the indication that it's probably coming back to test the T line. We did Apache. Apache, I would be closing out if it opens lower tomorrow. Moss is holding up. It has to open positive and trade positive. IPI needs to open positive. All these are food related, or are they food related or fertilizer related? And CF also needs to open positive tomorrow. CRTX, I think we did this one, right? Yeah, it has to open positive if you're long. If it opens lower, close it out. Bidu goes short. A bearish, look how they failed right at the 50, closed back below the T line. Strong sell indicator. Johnson & Johnson. Okay, good, Larry. It looked like it was starting to run out of steam up here. Target. That one you can short because of the best friend heading down. Ford moving sideways. Right now would not be long or short Ford. Kodak. Oops, that's a strong short signal. Traded up and then did the booster selling. If this opens lower, at least they're coming back to test the 200. T-Mobile, that's an unexciting chart. If you're long, you can stay long as it stays above the T-line. Are you sure that's the symbol? Not coming up. Raymond, if the S&P opens lower tomorrow, they're probably coming down to test the 200. On which one, Bill, I'll be glad to fool you on anything you want me to. Walmart, another one that's a very lethargic trader, but if you like it, you stay long. Don't let it close back below the T-line. Obviously, wouldn't be trading this one. That'd be more of a longer-term hold. And Knox broke out. That one you can get ready to buy on strength. And Costco, a shooting star today. If this opens lower tomorrow, which would also probably be a function of the market direction, it's probably coming back to test the T-line. Well. RADA, stay short. Use the T-line as your stop. Big evening star signal, bearish harami, gapped out through the T-line. That's not a good chart. Stay short. Micron, stay short. Big left-right combo failure at the 50. If this opens lower tomorrow, you've got a bearish doji sandwich. Had a yield inversion after hours today. Now, as far as on the short-term notes, I think they said it was showing what would be considered a recession. Chewy did a hanging man gap down, stay short. Mr. D, it could be historically that way. However, we always let the charts tell us what is actually happening. Ross Stores, that's kind of a nothing chart. What are those green lines at key resistance and support lines that you put in or automatically put in by software? I don't know which ones we're looking at, Mike. Oh, I don't know what these are. They may be the lows. Yeah, I don't know where they came from. Are they? Oops, they may have been Fibonacci retracement stuff left over from me forgetting to take them off. We did no video. We did the VIX. Can no longer be used as a reliable volatility. It is broken to the company. All right. Kelly, that 5 symbol might not come up over here. TFO, whoops, TLOFF. Now, they don't come up. Frustrated paying customer, campaign, webinar, password, 75 This is not the password tonight. Lost 20 minutes trying to get in. Rob, do you not read your afternoon and morning comments? The password on Thursday nights is usually specific because we have a lot of non-members in here. And then right afterwards, it will go back to the normal member's password. So on Thursdays, I'll repeat the question. Rob, don't you get the morning and afternoon comments? Shopify. You can go short on this one. Smart for life. I need whatever that is. It's setting up, but there's nothing exciting there, Harvey. Tim Bernino Bummi Amimi by Bama. Have you ever had anybody tell you to go out and make a name for yourself? I miss Tesla. Tesla, you can see your hanging man after the gap up. I would suspect on weakness they're coming back down to test the T-line. Wells Fargo, you can go short on this one. A failure at the 50 with a bearish left-right combo. I would suspect first target down here. Continue to stay short, yes. Cleveland Cliffs, that's getting a little bit dicey. If this opens lower tomorrow, they're coming back to test the T-line. When I say test the T-line, that's the direction they're heading in. Then you have to wait and see what they do once they get to that level. Trade Desk, that's a bearish Harami confirmed. If this one opens lower, you can go short. QuantumScape waffled around today, but it's still above the T-line. And this fry pan bottom is still working. You can still be buying this one. Facebook, observe the obvious. There was the change of your downtrend. Where was the first likely target? Back up to the 50. And then you can see what type of signal you had there. Bearish Harami. You can short this one again if it trades back below the T-line. Intel. Bearish hanging man confirmation. Gap down. First target now is likely back to the 50. All these bank charts are really falling apart. Guess no longer expect rising rates to benefit them. Must be fears of recession. That could be. This is why you let the charts tell you what's going on versus what each of our own individual assessment is. McDonald's. Sandy gets mad when I tell the guys at the window that when I was their age, we would go down the hill, get 3 cheeseburgers, a French fries, and a vanilla shake, and only have $1 with us, and we'd get change back from our dollar. McDonald's stay long. Suspect that it might be coming back to the 200, but then you want to see if it supports at that level. We did Facebook. I don't know what the password 75 would have been from. That's not a password that I recognize. That's probably true. You got that email also? And your email was 41. We could get 3 candy bars for a quarter or 10 cents each. Yep. Used to be a nickel, weren't they? Rob. Yeah, apologize for whatever the password. I don't know where all that would have come from. Oh, I still tell the story when we were in Waterville, New York, which is in upstate New York. We'd gone over to see some friends before we were heading back to Pittsburgh. And before we pulled out of the driveway, we said, my dad said, where can I get some gas? Need to fill up before I go. And our friend said, well, you go down to the end of the street and make a right, and there's a station down on the right. My grandfather piped in and said, no, you get on the end of the street and go left. They only charge $19.9 a gallon. The other guy's robbing you. He's charging $22.9. What did I just do? STRC? I think we did this one. You stay long on this one. Yeah, but I was only knee-high to a grasshopper back then, Joe. I was still growing. It was the starting now email at 7:45 p.m. Let me put this over to Abe and see what. All right. Okay, I guess that's about all we got for tonight. So let's backtrack here a little bit. DWAC is a very strong short on weakness tomorrow. A was just emailed or Gmailed me back and said, yeah, it was a lot of strange things this time. So apparently it wasn't from him. There may have been something in the, oops, hang on for a second, nurse crack. That was Nurse Cratchit. Yeah. Well, then there's the old saying where the two guys are talking. He said, oh, I can remember when it's cost me 50 cents to get a cup of coffee. I can remember when it cost me a nickel to get a cup of coffee. And his buddy said, yes, but today we have the 50 cents to buy coffee. That's right, upgraded. All right. Yours said 41. All right, that was the one. Should have been the right one. Boy, all I can tell you is if you are having trouble getting on any given night, just email us, admin@candlestickforum.com, abraham@candlestickforum.com, steve@candlestickforum.com, and we'll make sure you get on. It probably was Bigalow 31. Today's the 31st. All right, everybody. We'll see you bright and early in the chat room tomorrow. Yes, you can always guess at what the password is. All right, we'll see everybody.